Welcome everyone to the Business Leadership Series brought to you by the US Pan Asian American Chamber of Commerce, also referred to as USPAACC, and sponsored by Wells Fargo. My name is Harris Kidwai, Small Business Development Manager based in the Southeast. At Wells Fargo, our teams work closely with small business customers by providing them resources, connections, and network to achieve their goals. I'm also proud to be a member of the Board of Directors of the Southeast chapter of USPAACC. Our topic today is one that many of you have been asking for today's webcast topics: small business HR trends. This includes minimum wages, pay transparency, and more. In a former life, having been in the payroll industry myself for several years, I have fielded several questions around these topics, which is why I'm beaming with pride to introduce two engaging speakers we've invited from ADP to share more on this topic with you. Before we begin the presentation, I also wanted to take a minute to review our disclaimer shown on this slide. It's intended to let you know that the content in our webcast today will provide a high-level overview and practical information about the subject matter that we're covering. It's provided with the understanding that neither I, as the presenter, nor the writers are rendering any legal advice or any other professional services. And please keep in mind that today's discussion is not the final word on any of the topics that I'll be talking about. As you are probably aware, regulations and legislation can and do change frequently, so it's important to ensure that you're always complying with the current rules that apply to your business. With that, let's meet our speakers. Allow me to welcome Jamie Noriega, VP Channel Sales at ADP, and Elena Almeida, VP Managing Counsel at ADP. Elena, over to you.
Thanks, Harris. It is great to be here. I know HR compliance is a hot topic and on the minds of all of our employers. I'm happy to have the opportunity to share some information about HR trends.
Absolutely, it sure is. And in addition, finding talent and retaining current talent are top concerns of small and medium-sized employers. So this topic is especially relevant and important, and I'm excited to dive in as well.
Everyone, welcome to today's webinar, HR Compliance Trends, with a special focus on pay transparency. Laws addressing wage transparency are rapidly evolving and are one of the most challenging compliance issues to watch for this year. The headlines are everywhere. California, New York, Colorado, other states are passing laws requiring employers, large and small, to share information about their pay ranges. Pay transparency laws have been one of the biggest trends for employers to pay attention to over the last couple of years. The two main purposes of these laws are to help ensure pay equity and to help reduce the effects of pay discrimination. These requirements basically change the information imbalance from employers, who usually hold all of the information about pay, to employees and job applicants. Now, what we broadly call pay transparency laws come in a few different flavors, and there's a spectrum of how much transparency is required. Today, we're going to talk about three main types of pay transparency laws. First, laws concerning pay secrecy and salary history bans. Second, pay data reporting laws that require employers to share information with state agencies about pay by demographic group. And finally, wage range disclosures, states requiring employers to disclose pay range information to job applicants through their job postings or direct conversations. Let's talk a little bit about pay secrecy and salary history bans. Employees may be protected by laws that entitle them to discuss their wages with coworkers, and any policies that prohibit employees from discussing their pay with others may violate the law. Now, the idea here is that these discussions can help employees learn about and address pay discrepancies with their current employer. Under Section 7 of the Federal National Labor Relations Act, the NLRA, employees have, among other things, the right to act together to improve wages and working conditions, and to discuss wages, benefits, and other terms and conditions of employment, whether or not they're part of a union. So the National Labor Relations Board, which enforces the NLRA, and many courts across the country have found that pay secrecy or pay confidentiality rules violate Section 7 rights. More than 20 states and local jurisdictions have enacted laws that expressly prohibit pay secrecy policies. And what I mean when I say pay secrecy policies are laws that cover express written policy. So there'd be a policy in a handbook saying employees shouldn't discuss wages with each other. That would be inappropriate under these laws. But also unwritten policies or practices in which employers discourage employees about discussing pay and encourage them not to discuss pay with each other. The next category is salary history bans. It wasn't too long ago when asking candidates how much they earn in their prior position was fairly common. In the last few years, however, several states and jurisdictions have passed laws that restrict or outright ban employers from asking about an applicant's pay history during the hiring process or when making employment and compensation decisions. The idea behind this type of law is that the candidate's pay history may reflect pay discrimination by a prior employer that could be perpetuated in a new job if the new employer relies on that prior pay to make compensation decisions. Over the past 5 years, this has been a key trend in states looking to address pay equity issues, with more than 25 states and cities adopting some form of salary history ban. Employers in these states and local jurisdictions need to avoid questions on application forms and during interviews about current salary. So what can an employer do? These laws typically allow you to provide the candidate with the starting salary or salary range for the position and ask the candidate whether that range would be acceptable if the candidate were offered the position. So as we move along the pay transparency continuum, let's take a look at the second type of pay transparency law, and those are pay data reporting laws. So in 2 states, California and Illinois, employers are required to provide regular pay information to state agencies to give the government visibility into pay issues and pay across demographic groups. Some of you may remember that a few years ago, the federal government added a pay data requirement to employers' annual EEO filing. Employers who had to submit EEO-1 filing to the government also had to add information about pay for the years 2018 and 2019. That requirement expired in 2019, but after that expiration, 2 states have picked up that mandate and have passed laws requiring employers with 100 or more employees to file certain pay data reports. So in California, employers with 100 or more employees, even if only one of them works in California, has to submit an annual pay data report. And that report has to show mean and median hourly rates for its California employees, split up by race and gender or sex and job code. For example, let's say an employer has 25 employees who are in a sales job. The report would show how those sales employees identify by race, ethnicity, and gender, and what the median and mean pay is for each race, gender cohort. Illinois has a similar requirement. Every 2 years, an Illinois employer must file a report disclosing each Illinois employee's demographic and pay data. At this point, neither of these reports become public information and they're shared only with the government agency. But these obligations do impose a new requirement of transparency to the government, and they require employers to analyze and make filings regularly to a state agency for review. The last major pay transparency trend that I want to talk about today is the wage range disclosure or salary posting laws. Now, this is the set of laws that you've probably heard most about in recent months. These laws are not identical, and they impact current employees and applicants differently. But generally, we can say that these laws fall into a few different categories. First, we have reactive types of laws. They require employers to disclose the pay range for a position only if they receive a request from the candidate. Again, these are reactive because the employer's obligation is only triggered when the employer is asked for that information. Then we have laws that require employers to disclose the pay range for a position automatically at a certain point in the hiring process. So for example, in these cases, the applicant doesn't need to request information about a salary range, but as soon as that applicant reaches a certain part of the process, like finishing their first interview, the employer is obligated to provide that salary range information to them. The broadest disclosure obligation is those laws that require employers to include a pay range for a position when posting a job, an open position in a job board. So some of these laws also differ in what they require you to disclose, such as base salary only or base salary plus information about bonuses, commissions, available benefits. There's a lot of nuance to these laws, and we've provided some detailed information about how each of these work in the slide deck. As of beginning of this year, January 1st, 2023, 8 states and 6 local jurisdictions have enacted legislation requiring private sector employers to disclose the pay range for a position to an applicant or employee. The states are California, Colorado, Connecticut, Maryland, Nevada, Rhode Island, Washington, and New York State. And the New York State law will become effective in September 2023. We also have cities that are entering this world: Jersey City, New Jersey, New York City, Ithaca and Westchester County in New York, and Cincinnati and Toledo in Ohio. Let me just give you a few examples of how these laws differ. Let's take a look at Maryland, Nevada, Colorado, and California. So in Maryland, upon request, all employers must provide an applicant with the wage range for the job for which the applicant applied. Nevada is slightly different. So in Nevada, it's not based on a candidate's request for information. All Nevada employers must provide the wage or salary range for a position to a person who has completed an interview for the position. There's also a requirement in Nevada that employers provide wage ranges for promotions and transfers of current employees. Now, in Colorado, each posting for a job opportunity, for a job opening, an employer must disclose the hourly rate or salary, a general description of all employment benefits that the employer is offering. In California, upon request, all employers must provide an applicant with the pay scale for the position for which they applied and provide an employee with the pay scale for their current position. But if an employer in California has 15 or more employees, they also have to include the pay scale for a position in the job posting. This is a really confusing, very nuanced set of laws. We have additional details on these laws in the appendix. I'd like to offer just a few high-level takeaways before, Jamie, we dive into some of the questions that I know you have. So to be best positioned to handle these pay transparency laws, we recommend that employers of all sizes review their internal equity and establish salary ranges. Employers should be prepared. Employees are going to have questions as they start to see salary ranges posted publicly on job boards. Prepare human resources, managers, recruiters, anybody on your team to have these important conversations with employees as they come up. Also, when complying with state and local laws on transparency, pay attention to the differences so that you can provide the correct information to the right people at the right time. As I said, these laws are extremely nuanced and there are differences. So when you're planning your strategy, make sure that you take into account the differences between the state laws.
Alina, thank you so much for that overview. There's so much to unpack here. So I want to ask a couple of questions that I'm sure are top of mind for all of our listeners. So first, who should be worried about these laws? So do these apply to just large employers, or do small and mid-sized employers need to worry about compliance?
It's a great question. So these laws do impact both large and small employers of all sizes. So while the pay data reporting requirements in California and Illinois generally impact larger employers of 100 or more employees, pay secrecy, salary history band, and the wage range disclosure or job posting requirements impact employers of all sizes. And let me give you an example. In New York City, the requirement to post salary ranges in a job posting, so publicly on a job board, applies to employers with 4 employees. And only one of those employees is based in New York City. The law will apply. So as a tri-state area native, I can say if you have 3 employees who are based in New Jersey and 1 employee who's based in New York, the New York City job posting requirements may apply to you. California, similar story. Employers who have 15 or more employees must provide a pay scale for a position in a job posting if one of their employees is located in California. But California employers with less than 15 employees still have an obligation. They have to, if they receive a request for a salary range, provide the pay scale for a position to an applicant or current employee.
Very interesting. And as a California employee, I feel like we've got those two geographies pretty well covered here. So what about the increasing number of employees that are working from home these days? So does that also apply to remote workers?
Yeah, so in most cases it does. So these state and city laws are written to cover typically any job that can or will be performed in whole or part in the jurisdiction. And I'll break that down a little bit. Let's take New York City again, and I'm not playing favorites. So the law covers jobs that can or will be performed in whole or in part in New York City. That could mean if you're posting for a traditional office job at a New York City location, it could cover field work or traveling sales work that takes place in whole or in part in New York City. It could also include full-time remote work if the employee's home is in New York City and they would be working from home. So a company with a remote job opportunity may have no specific intention of hiring a New York City employee for the role, but they might be expected to comply with the posting requirements because a New York City resident could do the job.
All right, interesting. So what do you recommend for an employer, which they do now, in order to be prepared to comply with these rules?
Sure, there's a few things that we recommend. Take a look at if you currently have job descriptions for the roles in your company, take a look at those. Ensure the job descriptions are up to date and accurately describe the role. Employers should also review their policies for determining salaries and determine and document pay ranges for positions. We also suggest that companies compare the pay ranges within their company to benchmarks in their geographic location and industry. And we strongly recommend that employers consider an audit of their workforce to determine whether there are any internal equity issues, that is, gaps between current employees who are doing similar work. Now, not all gaps between employees in terms of pay is inappropriate. There are reasons why employees doing the same work may have different pay. Those justifications could be location, experience, performance, but you really want to take a look at your current workforce to make sure that there aren't any unjustified differences between people doing the same job. And if you find any sort of pay discrepancies that in your current workforce that aren't explained, you are going to want to take a look at those and figure out a way to address them.
Absolutely. That's really helpful to think about it in that checklist format. But it does feel like a lot. And I'm sure not all employers have the resources experience to handle each of these analyses.
Yeah, I almost hesitate sometimes to provide that kind of list because it's daunting. It all sounds like so much, especially for smaller and mid-sized companies that may not have the infrastructure or team members in place that have the time or experience to do this kind of analysis. It doesn't have to be so daunting. So first, HR technology can help employers address these key issues, and it can give employers the answers they need when they need them. So when they're making decisions about what salary range to post, have the information available. Pay equity and pay transparency is all about data, and it's important to make sure that that you have that data at your fingertips when you need it. For example, I mentioned that employers can look at benchmarks when they're developing pay ranges and determining whether their pay is competitive. You need benchmarking data that is up to date, comes from reliable sources, and is relevant to your workforce and industry and location. And that's the case whether you're a small retail store in a suburb, a large tech company, a restaurant in the city. Knowing what the pay is in your market gives you the opportunity to evaluate how reasonable your pay scale is. And if your pay range is below market, and frankly, sometimes the pay range is going to have to be below market, it helps you determine what levers you can use and what you can adjust to make your offer more attractive to candidates, whether it be how you offer your total comp or benefits package, or flexible hours, quality of life. Those are all important characteristics to job applicants. So starting with the benchmark, starting with the data, and understanding where you are in the market can help you make the most attractive offer, the attractive posting for job applicants.
That's awesome. And we'll actually talk about some of those benchmarks and the resources later on in the presentation. But it got me thinking about something else. You had mentioned employers should consider their internal equity or the pay differences between current employees. Could you expand on that a little bit?
Yeah, so in my view, posting a salary range, pay transparency laws are not about just posting a salary range in a posting and calling it a day. Employers have to expect that employees will have questions about pay. Even for those laws and those jurisdictions where the law is geared to job applicants and providing the pay salary information, the salary range information to applicants, when employers post a salary range for an open position, current employees are going to see that range. And current employees might have questions if they feel that their salary is at the low end or below the posted range. And that's going to lead to some difficult conversations. Those conversations don't have to be as difficult as it sounds if you're prepared to handle them. So before posting a salary range, employers should look at their internal numbers to see how that range compares to what current employees are making. And if there is a difference between the salary range that the employer plans to post and what current employees are making, understand why that difference may exist. Are you actually posting for the same job, or are you just using the same title? Is there differences between the levels of experience that you're looking for in these jobs? Or is it a difference in job responsibilities or performance? Again, not every pay disparity is illegal, but employers should be prepared to explain or correct what pay disparities they do see and help have that conversation with their employees to explain any differences. That could help employees have develop more trust and foster a better open communication with their employees. But again, HR technology, I don't want this to sound as daunting and complicated as it is to do an internal equity analysis. HR technology can help you compare your current employees by role, geography, and other factors. And in a lot of cases, if there's a gap, there's a technology that exists that offers recommendations for how to start fixing that issue in ways that fit into your budget.
Well, that's great to hear. Any last tips for employers that are facing compliance either now or maybe in the future when they're thinking about this changing pay transparency landscape?
Yeah, so my number one takeaway is that employers should be prepared. Pay transparency laws are here, they're staying, and we expect them to be passed in other jurisdictions this year. So it's important to start thinking about how you plan to address these today, even if these laws haven't reached your jurisdiction yet. I found that employers that are most successful at navigating these issues are the ones that go into their pay strategy decisions focused on how pay transparency can help them and their employees. While I know we talk about it a lot as a compliance obligation, these laws could be an opportunity to reduce the gap, the pay gap that exists through data analysis, and facilitate more open and honest conversations with your workforce and with your leaders about pay.
That's great. That's certainly exciting. And pay transparency, we know, is a top compliance trend, especially right now at the moment, but it's also not the only one. So what are some of the other issues that employers should be on the lookout for?
Sure. So, one issue that I have on my eye on for this year is changes to what constitutes discrimination of employees. And one interesting way that that's come up is a number of states and cities have passed new laws or they've amended existing laws concerning hairstyles. So these laws protect employees and applicants from discrimination based on hairstyles or hair texture. These laws stem from, in many cases, in which Black employees and applicants have been denied jobs or denied promotions or roles in certain client-facing opportunities because they choose to wear their hair as locks or afros, cornrows, braids, and twists. So employers should eliminate policies and practices that violate these laws and standards, including policies that prohibit particular types of hairstyles or limit which roles employees and applicants with these hairstyles can have. Another trend, Jamie, that I've seen a lot of movement in already this year is paid family leave programs. So not going to get into a lot of the detail here, We've provided a bunch of links to some of the key changes that may impact your organization by state, as you can see on this slide. The general trend is providing more opportunities for paid leave to employees. So some of these laws have increased the maximum amount of paid leave available to employees, or expanded the reasons why somebody can take a paid leave. For example, some of these laws allow paid leave now to care for a sibling with a serious health condition, in addition to the standard family members like parent, spouse, and child. I know that was a lot to cover in a short period. We do have some additional materials in the appendix that provide more detail on this. And Jamie, I know you have some resources that could be helpful to today's participants as well.
I do, and I'd love to share some of those that you can utilize to stay ahead of, again, this ever-changing compliance landscape. First, let's talk about resources for pay transparency. I know we talked about it a little bit earlier, and I mentioned that we'd get to it at the end. But ADP pays 1 in 6 Americans, so we have a tremendous amount of pay data, like Elena referenced, that we can leverage to help our clients and partners. So what we do is we take 30 million employee records, aggregate those records, and anonymize the information. That allows us to provide localized and job-specific salary benchmarks. Having this data is incredibly powerful because it gives you an ability to make sure that your offers are competitive and then also consistent across your business. Salary benchmarks are available to our small and medium-sized business clients through our Run powered by ADP payroll product. ADP also has an insightful podcast called HRpreneur. HRpreneur is geared towards keeping the small business owner informed on HR, payroll, time, and benefit updates. Our Spark blog is another great place to check out news and tips for busy employers. The last resource I'll share today really can help you to evaluate and select the payroll vendor who best meets the needs of your business. And then the payroll calendar is always helpful to organize your payroll schedule and keep those federal holidays in mind when you're planning out your pay dates. This has been a tremendous time with you all. We hope that it's been incredibly valuable for you. And I'll turn it back to you, Harris, for closing statements. And thank you again for having us on.
I've learned a lot today on several very important topics, and also about how the requirements are different in various states. I want to give a huge thank you to Jamie Noriega, VP Channel Sales at ADP, and Elena Almeida, VP Managing Counsel at ADP, for sharing such great details on how we can have a more engaged workforce. Thank you to USPAACC and their support producing today's event. Thank you for joining today's webcast. Have a great day.